Hello, traders. This is Bill Dixon with RJO Futures Rolling Trades. Today is Wednesday, February 25th. Just want to discuss how some of these markets might react to tomorrow's meeting between U.S., Iran, and Geneva, and also a little bit on yesterday's State of the Union address. Um, Stocks have largely been stuck in this trading range of about 6,800 to 7,000 here. We've got a lot of geopolitical risk on the table here between Russia, Ukraine is going on 4 years. We've got escalations in the Middle East, obviously, as well. But while we're pricing in, a little bit of risk premium, and I think that's probably keeping a lid on some higher equity prices. Um, we're not really seeing these crisis level sell-offs. Tomorrow could invite that, but we'll discuss some of the ways that might happen in a little bit here. One thing I did want to point out was if you think back to June of last year, it was end of June over a weekend when U.S. did strike Iran. We didn't really see the typical reaction one would expect. Crude had been rallying quite a bit into that event. Stocks were rebounding a bit as well, and gold was pretty steady leading up to that. In the aftermath of that, we didn't get what one would normally expect, which would be explosive prices in crude and metals or energy and metals, and a sell off in stocks. Stocks just continued to trek higher. Gold and silver sold off a little bit. Gold sold off about $150. I'd argue silver's reaction was maybe a little bit more muted. And then both metals just kind of chopped around for the next 2 months through July and August. And then in September was when we really started that next, explosive rally there. Crude was on its way higher, did get an initial spike reaction, but then sold off. I mean, we went, from about, where were we here? We went from about 64, $65 all the way up to 78 and then back down to 65, largely in the blink of an eye. And then we trekked a little bit lower on supply concerns before starting this pattern higher here that we're currently seeing here. So, what can happen tomorrow? A few things. Obviously, we could get, escalation if talks just completely fall apart. I think I would argue that would be bad for stocks. We may come to or make up some ground. Perhaps we do get some kind of an agreement in principle. I wouldn't hold my breath, but perhaps they are constructive. In which case, I think that might take the lid off stocks a little bit, and we could probably eclipse 7,000 by a decent margin. Or we could kick the can down the road and say, well, we'll address this later, which wouldn't surprise me at all, and maybe even the most likely outcome here. So, as far as crude goes, we did settle above 66 yesterday. That's the highest level we've seen since August of last year. However, today in the EIA report, we saw a surprise build of 16 million barrels. Obviously, that would weigh on this rally a little bit. We do have some resistance. We got some supply concerns that we've largely sorted through and got us out of the mid 50s levels. And then obviously the geopolitical tensions obviously are carrying us higher as well. Um, Tomorrow's talks, again, it's going to all depend on where we go. If we do get an escalation here, I would expect to see higher prices, perhaps into the low 70s. If we come to some kind of an agreement, I think that will probably drop us at least into the low 60s again. And then if we just kind of kick the can down the road again, which is like my most likely scenario, we will go ahead and probably just continue to chop around and trade off headlines. Um, but the 16 million build, this was the largest since 2023. Obviously, Trump spoke about lower crude prices, citing a lot of the, under $2 in parts of the country and whatnot. He wants to keep this low. He wants to continue to pump out more and more supply. We'll see what OPEC and OPEC Plus decide to do moving forward here. I know that they've kind of, shied away from increasing production with relatively low prices from a historical standpoint. Um, but that may change moving forward as we get into the summer and we can usually expect a seasonal rally starting at the end of March. With gold, obviously we've kind of been flip-flopping here around the 6,000, or I'm sorry, the 5,000 level, currently sitting at about 52, 50, 52.30. Um, So we're not getting the constant flows into the market anymore. Obviously, we had that blow off top north of 5,600, and then took it all the way back down almost 4,400, and now it's a little bit more of a two-sided trade. Dollar has continued to firm up. Margins have increased significantly. These obviously weigh on the upside in precious metals. However, we still do have a bullish take. Chart still looks pretty good. Obviously, there's a little bit more noise in there than there used to be, but I think it's something that you probably want to get long on. Now, how will tomorrow affect gold? More specifically, I do believe it's, again, escalation probably invites higher prices, some kind of a deal. I don't think it should crush this rally, but I do think that it probably takes some of or acts as a little bit of a headwind, if you will, take some of the wind out of its sails. And if we just kick the can down the road, we'll continue to be kind of headline based and see what, other markets are doing, in particular the dollar, and if that can, strengthen up or continue to weaken. Um, Rate cuts keep getting pushed back. Now it's looking like the most likely scenario is July for the first cut, and it's not overwhelming odds that we do see that first cut in July over, still have rates of where they're currently set at. Markets do currently have us on pace for two cuts by the end of the year. So we'll see. I know Einhorn came out recently and said the bet is to go ahead and bet on more cuts than the market is currently pricing in. Yields fell a little bit since then. We've seen an increase in price of the Treasury futures. Um, but we'll see. I mean, this is something that we thought would probably have happened by now. Warsh got appointed and doesn't seem to be as dovish as what one would have thought when Trump was talking about who he was going to appoint. So we'll see where this all goes. But for now, the money's on July by a little bit here. Um, Speaking again of rates in the U.S. dollar, I mean, we have the 10-year, just keeps holding this low, 4% range. Dollar index is grinding a little bit higher now, up to the higher end of like the 97s. Um, Pretty stiff resistance, a little bit higher. We'll see whether or not it can muster, a bigger rally, but I think it's going to take a little bit more news, maybe from the next Fed report in about 3 weeks or so. As far as the State of the Union goes, it's largely pretty typical Trump, but as far as, how this can relate to commodities, obviously he wants to go ahead and find another way after being the Supreme Court shut down his method of imposing tariffs. He is looking for alternatives and will probably, continue to keep them in some way, shape, or form. Whether the courts shoot him down again in the future remains to be seen. But it doesn't seem like they're going away. That can certainly be inflationary for commodities, supportive of the dollar at the same time, and you could see a demand drag as opposed with the inflationary prices in commodities. Um, then he also touched upon the energy and data centers, uh, wanting to shift a lot more of the cost from the consumers to the data centers themselves. We'll see how this all works out. I still feel like if I don't know that they're suddenly going to stop these projects in their tracks, which would obviously weigh pretty heavily on demand for silver and copper in particular. Um, but these are heavily funded projects as it is. But obviously they can move forward a little bit quicker if you know they are receiving a lot more public assistance. Um, so we'll see exactly how this all plays out, but all eyes will be on Geneva tomorrow to see what kind of result we get, and that's going to be certainly the market's next big cue, and will shape the most or the narrative moving forward here, until we hear otherwise or we get some news out of the Fed again. Here are the next big events here, but that's about all I got here for today. Just wanted to touch on those key points very quickly. Um, if there's anything else that you would like to talk about, you can reach me at 312-373-5342. I can also be reached at bdixon, Dixon, at rjobrien.com. Thank you. Bye.
The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results.